Hi everyone, this afternoon on the marketplace, Ghana Cedi loses 3.88% in value to the US dollar on the spot market, increasing its year-to-date depreciation to 21.20%. Also coming up, Ghana's cocoa sector contracts by 20.2% in Q1 of this year, the worst in a decade.
Subsector between 2017 and 2022 never saw a contraction, but in the last 6 quarters, we've seen the cocoa subsector contracting 4 out of the 6 quarters.
Plus, Ghana signs $12 billion agreement with a Chinese consortium for the first phase of the Petroleum Hub Development Project in the Jomoro municipality of the Western region.
The project is operating at full capacity. It will rather complement and not compete with fully functional Tema oil and Cedi oil refineries.
My name is Darryl Kwao. Thanks for being with us. Details coming up. And first up, the Ghana Cedi lost 3.88% in value to the US dollar last week on the spot market, increasing its year-to-date depreciation to 21.20%. This follows the strengthening of the US dollar and renewed local corporate foreign exchange demand. Here's more in this report.
Local unit started this week unchanged, selling at 15 cedis 70 pesos at the forex bureaus. The U.S. Federal Reserve signaled just a single policy rate cut this year, contrary to market expectations of 2 cuts. This grip on monetary policy sent the American Greenback Index soaring about 100 basis points week on week, leaving the cedi railing against the major trading currencies. The local currency also shared 2.4% against the British pound and 2.8% to the euro last week. However, the government of Ghana and its official creditors had agreed on a debt rework. This will pave way for Ghana to receive a disbursement of $360 million, contingent on approval by the IMF board at the meeting scheduled for June 28. But analysts believe this will support foreign exchange buffers, improve FX liquidity, and help stabilize the weakening cedi in the near term. Meanwhile, this week, the local unit is expected to trade sideways due to the strengthening dollar and the prevailing foreign exchange demand.
And so where are we at on the currency market this afternoon? We want to take a look at our currency board this afternoon. The US dollar buying, if you want to buy the US dollar, is going for 12 cedis 20 pesos. It's being sold at 15 cedis 70 pesos. The pound sterling, 19 cedis 25 pesos buying rate, also selling at 19 cedis 70 pesos. The euro, 16 cedis 25 pesos if you want to buy, 16 cedis 65 pesos if you want to sell the euro. Also, the yuan going for 2 cedis 03 pesos. That's a buying rate. 2 cedis 11 pesos selling rate. Also, the rand, 80 pesos if you want to buy, and it's being sold at 85 pesos. And so that's it on the currency market this afternoon as we continue to monitor the performance of the local currency. Now, the cocoa subsector has contracted for the 4th consecutive quarter with a sharp decline of 20.2% in the first quarter of this year, according to latest data from the Ghana Statistical Service. This represents the most severe drop in over a decade. Winston Taki has more in this report.
Ghana's cocoa industry faces significant challenges, with the 2023-2024 cocoa harvest expected to plummet to between 422,500 and 425,000 metric tons, marking a 22-year low. The first quarter 2024 data showed a further decline.
Cocoa subsector between 2017 and 2022 never saw a contraction. But in the last 6 quarters, we've seen the cocoa subsector contracting 4 out of the 6 quarters. So we really need to go to the drawing board to ask ourselves, what did we do between 2017 and 2022 quarter three, that the country never saw a contraction in the cocoa subsector, but in the last 6 quarters, that is between the second quarter of 2022 up until now, we have continuously seen 4 of the 6 subsectors, with the cocoa subsector contracting 4 times.
Professor Samuel Inim says this was alarming.
From the perspective of Ghana Statistical Service, this is not coming as a surprise, because when we did the trade statistics a couple of weeks ago, it did show up that from a trade perspective, we've seen a decline for our cocoa subsector from a trade perspective. And this is being confirmed with the 20.2% contraction that we've seen in the first quarter of 2024. Indeed, this contraction of 20.2% is the worst contraction that we've seen in more than a decade as a country.
Despite these setbacks, Ghana's overall economy grew by 4.7% in the first quarter of 2024 compared to the same period last year, demonstrating resilience in other sectors. Winston Taki for Joy Business.
Government of Ghana signed a $12 billion agreement with China's CCP UIC consortium for the first phase of the Petroleum Hub Development Project in the Jomoro municipality of the Western region. The project is expected to create 780,000 direct and indirect jobs and revolutionize the downstream petroleum sector in Ghana and across the continent. This agreement, made between Ghana's Petroleum Hub Development Corporation and the Chinese consortium, is part of a broader $60 billion investment by the Ghanaian government to transform the energy sector. There's more in this report.
Divided into 3 phases, the first phase, costing $12 million and spanning the next 4 years, will include constructing a state-of-the-art refinery with a capacity of 300,000 barrels per day, a petrochemical plant, a 3 million cubic meters of storage tanks, and the development of a jetty and port infrastructure. The signing ceremony included key sector stakeholders and traditional leaders from Nzimaland. Chief Executive Officer of the Petroleum Hub Development Corporation, Charles Owusu, stated that the project, when fully operational, will enhance energy security by complementing the existing refineries in Ghana and across the continent.
When this project is operating at full capacity, it will rather complement and not compete with fully functional Tema Oil and Cedi oil refineries, Dangote's refinery, and all other refineries dotted across African continent to help meet our energy needs. Additionally, it is to help Ghana sustainably explore her numerous hydrocarbon deposits for jobs, energy, revenue, and further integration with the global economy and development without turning a blind eye on the ongoing global energy transition effort and climate change.
The Minister of State Enterprises, Joseph Kujo, explained the funding mechanisms of the project.
It is a Ghana government securing land, 20,000 acres land space in the Jomoro district, and that has been done. And a Ghana government establishing a functioning institution like the Petroleum Hub Development Corporation. That has been done and staffed. And a Ghana government and PADC signing lease agreements. You know, PADC, the land is vested in the PADC. So signs lease agreement with investors who come in and establish the components, the refineries, the petrochemical plants, the storage tanks, the pipelines, and everything. So the first leasing agreement is what we witnessed. So it is like you have an anchor tenant who you have signed an agreement with to come and develop. Once they hit the ground and start development, the other investors will come in with their money.
The Minister of Energy, Machi Opoku Prempeh, tasked environmental regulation agencies to ensure strict adherence to protocols, ensuring local communities benefit fully from the project.
We have to find a way of making sure our natural resources God has given us, we don't let it go to waste. And at the same time, not to degrade the environment as we are doing that. So and the Petroleum Commission has been leading the charge to make sure health and safety issues and environmental issues in the oil and gas industry is dealt with. The MPA, Petroleum Commission, and the Ghana Standards Authority have also taken care of one thing that I'm going to talk about, and that is physical measuring or physical measurement. You know, you can take as much oil as you have, but if you can't count 1, 2, 3, how much you have taken out, maybe the people of Jomoro will not get the development that the people of Obuasi never got because they took so much gold and we couldn't count our resources. We have to be able to count our resources.
On his part, President of the Western Regional House of Chiefs, Awulai Angamatu Ejan II, assured their support for the transformative project.
And I want to assure you that as the paramount chief of Jomoro district, anything that I and my chiefs and people, you see a lot of them who accompanied me, we give you our assurance that we will help you to let the project take off.
Covering over 20,000 acres in the Jomoro municipal area of the Western region, the privately led petroleum hub will secure investment and develop key auxiliary infrastructure. This project is expected to create numerous jobs and aims to increase Ghana's GDP by 70% by 2036. For Joy News, Carlos Galoni, Accra.
Now, Member of Parliament for Ningo Prampram Sam Nati George, as a way of ensuring long-term investment and sustainability, is asking lubricants manufacturer Petro-Canada to set up a plant in Ghana. He says the country provides Petro-Canada a launch pad into the African market, which has enormous potential. Sam George was speaking at the opening of the Dutilex and Petro-Canada's second terminal at Tema Community 25. Here's more from correspondent Kwame Anka.
The journey of Dutilex Oil started 5 years ago when Chief Executive Officer of the company, Peter Kwam, who has an oil and gas background, was posted to Iraq. There, he saw a country trying to rebuild itself after being torn apart by war, giving him an idea of what he could do to help build Ghana. 5 years down the line, Dutilex Oil and Petro-Canada Lubricants Partnership is said to be worth the journey, having served clients in energy, mines, food and beverages, manufacturing, but to mention a few. Speaking as guest of honor, Member of Parliament for Ningo Prampram, Sam Nati George lauded the partnership and suggested to Petro-Canada to consider setting up a plant locally.
The key thing for me is I'm excited you're here, but my excitement will be peak if you didn't just bring in your products and sold here, but if you set up a manufacturing plant here in Ningo Prampram to service the whole of Africa. It's one thing producing the product and shipping it into Ghana and distributing it here. It's another thing, we've got the raw materials here, but I'll be interested to see how well we can turn Ghana and Ningo Prampram specifically into a manufacturing hub for your product. I think that long term, looking at the benefits of the African market, it would do you best if you were producing locally than bringing the products from outside.
Senior Sales Manager of Petro-Canada for UK, West, South and Central Africa, Sam Akwe, is happy the partnership is growing, but establishing a plant in Ghana to serve Africa will depend on demand.
Long-term plan has always been to first establish a good base in Ghana to make sure that Petro-Canada and Dutilex are well established in Ghana and we hit a certain market share. But then for the rest of Africa, it's about finding good partners who can work with Dutilex, because Dutilex cannot do it all. The saying goes, you can't eat an elephant all in once. You have to gradually get the right partners, chop it up in small slices, and then go for it. So it's a gradual process. Long term, would want Dutilex and Petro-Canada well represented in lots of African countries. Not because it's just another lubricant, it's because they believe that it satisfies a need.
Chief Executive Officer of Dutilex, Peter Kwam, says local content matters a lot to the company.
And at the moment, the strategy is to bring in the product from abroad. And now I speak for Dutilex. The long-term goal for us is to be able to blend in-country. And that's what our plans would be. That's what our strategy would be going into the future. How gradually we could obviously move from where we are now to a point where we blend locally, we employ locally, and obviously bring the expertise into Ghana. That's what the end game is about. Now you don't see a million liters here because this week we've actually supplied a lot. So we want to build capacity. Capacity in the faces of our clients means that if they call us at 12 o'clock, at 11 o'clock, we are able to deliver.
Meanwhile, Chief Operating Officer and National Sales Manager for Dutilex, Ebenezer Lai Jr., shares how companies are cutting costs and obtaining efficiency.
Lubricants will sit at number 2 or number 3, when it comes to budgets. But if we are almost cutting that budget into half for, industry, you should see the profits that we are helping other institutions or manufacturers or our partners actually make. So it's a wonderful product, and we actually want everyone to be part of the journey. We have started doing some work in Nigeria, some business in Nigeria and all that. Africa is for the taking, and Africa should prepare for quality.
Through the partnership, Dutilex Oil is to supply West Africa, Central and East Africa with Petro-Canada's lubricants. This terminal at Tema Community 25 comes after establishing one at Takwa to serve the mines.
Now, the Ghana Union of Traders Association, GUTA, is calling on authorities to be bold and clamp down on foreigners operating in the retail space. According to its president, Dr. Joseph Obeng, foreigners are flooding Ghana's retail space with subsidized goods. This, Mr. Obeng believes, is gradually pushing Ghanaian traders and manufacturers out of business, placing a heavy toll on the local currency. He spoke at the Customs Controls and Regulations Forum organized by the Ghana Investment Promotion Center.
Every Ghanaian is saying that the local traders are selling higher than the Chinese. So we have the China Mall, Chinatown, who have taken over 40% of our market and who are derailing the efforts of local manufacturers. And we do not have the courage to clamp on them. They do not bring the forest. They don't bring the corresponding forest for trading. All that they do is to have their subsidized goods being dumped in Ghana, and then they go to the black market and then change the money, change the forest to destroy our economy. Sometimes we have to be bold. Shouldn't be that we jeer all this effort to the local trader. It is unfair. The import that we do into this country, the local traders component is only 20%. The bulk of it is being brought by this China Mall, Chinatown, and other foreign traders.
So Ghana's tech ecosystem from 2021 to 2023 was valued at $2.6 billion according to Global Startup Ecosystem Report 2024, which provides insights into the world's leading startup ecosystems, emerging trends, and key challenges facing entrepreneurs. Lead for Eyes of Africa, Henry Kobler, has been looking at the report. He joins me on Zoom. Good afternoon to you, Henry. So $2.6 billion, what does this tell us about Ghana's tech ecosystem?
Thank you very much, Daryl. 2.4, it actually puts us at the fourth. If you're looking at how basically we've come, Lagos relatively is doing very well and is looking at almost about 11 billion. And you have Nairobi actually comes second with almost about 7 billion. And then Cape Town relatively also rubs shoulders with us. And then before you have Johannesburg come after us. Looking at these numbers, it relatively looks good in terms of the African landscape, but I think that we could relatively do better. If you're looking at what we could project in terms of the products and a lot of the startups that are coming up, and again, looking at the enabling environment we're having in Ghana, I think that much of our problem is really being able to attract the right investors to come put their money into the ecosystem here. But generally, I don't think it's bad. I mean, looking at the landscape, but I think that we could do relatively better looking at how much Lagos is sort of attracting in terms of the investment into the ecosystem.
Well, let's talk about a bit more about the key challenges facing the ecosystem. You talk about inability to attract the right investors as one of them. Let's take it from there.
Yes, I mean, if you're looking at that, you definitely looking at how most of these startups relatively come about. I mean, having quite a lot of innovators come through from most of the incubators, and they're putting a lot more work into the solutions. But again, I think that looking at the size of the market here in Ghana, it relatively does not attract a lot of the investors, and so I think that most of the innovators relatively have started looking at how they could span, looking at the ecosystem all over Africa. And that's one thing that I think that a company like ZPay relatively had done, because if you're looking at the kind of investment it's attracting, it's because its solutions relatively is not spanning just within Ghana, but it's more getting to different African countries that are not even well developed in terms of the tech. I mean, they're practically in Zambia, Zimbabwe, all of those countries that relatively is not of a high tech zone, but relatively would still need very quality tech solutions. And so I think that that comes into play. Again, I think that the policy that basically comes in our regions also deters some level of investors. I mean, if you're having e-levy come short at any time, you're having taxations flying in without prompts. And again, when the technology itself is not gaining a lot of grounds, but you're having regulations, I mean, stifle the growth, investors relatively are not going to look at that. Again, our forex exchange really does not help. And so investors really look at a very unstable pointer for a company that is sort of now coming and will not even have levels of indicators in the survival of it here. So I think some of these things relatively come in. Again, most companies in Ghana do not exit well. I think they're just about 70 million in terms of exits, and practically you're just looking at about 2 companies or 3 companies doing a proper exit that comes in. So, and if you're looking at a unicorn within our ecosystem, it's just about 1 unicorn. I mean, practically I could point to ZPay, but it's really not likely to give you that. And then if you're even looking at the salaries that you're having software engineers, I mean, pick up, it's relatively under $5,000. And that's really not encouraging for innovations by people that would really want to dedicate a lot of time to put together solutions for the market.
I mean, based on the report, what are some of the emerging trends we should be on the lookout for?
So I think that we relatively looking at a lot more strength within the fintech industry. That's really proven to give a lot more in terms of solutions and a lot more in terms of being able to attract funding. The agri-tech is also doing very well in that regard as well. And then I think that logistics and transportation seems to be peaking. We could also be looking at other sectors as well, but I think that these 3 sectors really have given some level of innovation to it. And again, I think that most people are becoming more tech savvy. If you're looking at the dedicated support and then the young talents that are sort of upcoming, they're really looking very good. I think the blockchain technology is also picking up. And so we could definitely have a lot more people looking into that. That becomes a proper trend for people to innovate and cut across borders. I think that Bank of Ghana really given, say ZPay, the outbound license really gives a lot of credence to people that would want to do a lot more apart from just being within the borders of Ghana. And I think that we've been able to build a very strong environment devoid of a lot more instability when it comes down to policies that stifles the growth. I think that we could do a lot more and just innovate around them.
Well, I'll speak of policies. How can policymakers and managers of the economy capitalize on the insights provided by this report?
I think that one of the things that we've seen in terms of the trends, particularly for me, I'm not even going to speak about the VCs and the foreign investments that are coming in. The very local investments that are coming in could relatively go. I think that when we're having a lot more local investors look at innovation and are able to invest more, it really attracts foreign investments as well. And I think that whenever government puts up any funding opportunity out there, I think that it should practically be on the fair point, should be properly managed. I mean, practically could be with a very private sector that does a lot of due diligence and able to seek for a lot of a lot of reports, a lot of solutions getting into the market. I think that works well rather than it being politicized. I mean, the funding opportunities relative when it comes from in-house, if it comes from locals, gives a lot more, should I say, trust in some of those solutions and able to give the very large part to it. Some of the policies have also been up in terms of tax policies and all that affects startups. Should really be clear and direct. I mean, startups shouldn't really go to a lot of stress to sort of even identify some of these opportunities and to be able to pick them up. I think that it's a very start of it for us before we even look at how foreign investments coming and I mean all that point where it gives to say that you're having a lot of taxations when foreign investors are coming in to invest in businesses. I think that should be easy managed and should really be having a very proper launch pad, especially from the regulator side and from policy side as well.
All right, at 30 seconds, any threats we should be on the lookout for?
Yes, I mean, much as we're looking at this, you're looking at a lot of innovations also being able to come in. I mean, I've seen quite a number of startups coming in from neighboring African countries coming. I mean, as much as we want to cross border, we should also be looking out for that threat because, it relatively does not give the growth within in-house developers to or tech innovators to be able to innovate. And again, also for foreign ones as well. I mean, I have seen within the blockchain industry, I've seen very huge giants with, very good, they don't even need funding relatively, but they sort of come into the system and they're just giving regulations assets to just run easily. I think that should also be looked out for. And I think that most of the innovations from government side should really not be on sole sourcing. It should rather be open up to a lot of the innovator incubators and businesses within Ghana to be able to grow.
Henry Kobler, a lead for Eyes of Africa, thank you as always for your insights and perspective. I appreciate your time with us here on The Marketplace. And that's our program this afternoon. Thanks for watching. More news on our website, myjoyonline.com. The day's latest stories over there, including the current news on the Cedi as we have been reporting this afternoon. myjoyonline.com/business. Money Lab next.